Hi there, it's Bill with Smart Trades. It's Monday, August 15th, just after the close around 1:05 p.m. Pacific time. And today I'm going to start off with a little bit of a review of some of the charts I've posted over the past several weeks. As always, please visit smarttrades.com if you'd like more frequent updates. Sometimes these videos can take between putting the charts together, recording the video, uploading, and so on, several hours. So there's no way that I can keep the charts on YouTube up to date as much as I can with the Twitter feed, which I do for my subscription customers. So visit smarttrades.com if you'd like that service. At any rate, here's a call I made in the NASDAQ back around the 26th of July. And this is actually on my newsletter, and I noted that if we got up to around 2440, that we would have a terminal wedge with bearish breadth divergences. And indeed, I posted on YouTube just the next day, I believe, that and in fact, I think we hit 2438 on this rally, just shy of that ideal 2440 target. And we had a wedge and a possible completed pattern at that time. And obviously I was looking for a possible higher low, but I also did note that that could have been a terminal longer term pattern. From there, and again, that call was made here on YouTube, just under the 2400 mark on the NASDAQ. We obviously have fallen almost 400 points from that high, and from there we have a possible impulse wave, wave 1 down, or it's not implausible that this is actually a terminal C wave. At any rate, at this point, we are starting to bounce back. Again, though, the point at which I initially posted this to my customers and here on YouTube was back in late July, noting that we had a possible peak and a possible sell scenario. Again, lots of you will remember I was initially looking for a triangle. That said, when asked what I would do off of this triangle at the top of the D wave, my response was that I would be looking to be short at the test of the top of the triangle. And then, as I always say, one step at a time, we'll see what happens when we get down here to the 1285 level, which was my initial target for the termination of the triangle. Well, it didn't work out that way, obviously. Here's that 1285 area. We plummeted right through. That said, we never did issue a excuse me, a buy signal at that 1285 area. It did hold there briefly, but we never got confirmation. We never got higher lows and so on and so forth. I believe even on an hourly chart. One thing I would like to bring your attention to on this count, this is the very bearish count, suddenly become very popular. And the idea that we have an A down, A, B, C of A, B, C of B, and then C here does not count clearly as an impulse or a five-wave pattern, which it should in a flat. And indeed, we did not make a new low below the bottom of wave A. So according to Elliott theory, this is a running flat. Theoretically, running flat should be very, very bullish. And in fact, our fifth wave here failed to make a new high above the top of B. So it brings to mind several questions. I mean, if indeed this is the correct count, why was wave 5 so weak? We have a fifth wave failure following a running flat. The pieces don't fit. In short, you don't have a clear five-wave structure of C. You don't even have that clear a structure of five waves up for the fifth wave, nor wave 1 down. Wave 2 up obviously would be corrective in either case, but again, long story short, the pieces in this count have some problems. They don't fit that well. So I'll get to that more later on. You will remember on the bonds before the breakout, I had noted this pattern. Even though we were looking at the market basically bouncing off of this channel for several months, when we had this decline here, and in fact you can count the rally up prior to that wedge as an impulse up, I noted that we probably would have a pretty good pop to the upside. And indeed, here's what played out. Obviously, I did not at that time anticipate the downgrade in the U.S. debt. Nonetheless, this is a case where you see the pattern, you have that corrective pattern, a relatively low risk place to get long, and the idea is simply to trail your stop up. This chart, by the way, is a little bit dated, but you get the idea. Again, we had that wedge, it held, it broke out, and we got the pop we were looking for. Back to the S&P. This is a little bit of an older chart. I was looking for an ABC first up to 1190, and then possibly up to about the 1215 area, which is the top of this little bump here, and also 1.272 times our wave A. So that's another likely target. At any rate, let's look at how we did at 1190. And I put this chart out actually before the weekend, and we had hit that target. I think it was like 1189.04, almost dead on that 1190 target. And we had bearish breadth divergences. However, off of that high, clearly this correction, this move down was corrective. It held right at the top of the wave A pattern. And this is when I say one step at a time, this is what I mean. We have a target, it was hit. However, it did not move properly off of that target to produce a top. Indeed, the move down off of that high was corrective, and in my report on Sunday and also on Twitter on Friday, I noted that we probably would move higher. The next target being the 38% retracement of 3. I actually have this mislabeled. I apologize for that. And this is our third wave down. Let's back up just a little bit here. So 38% comes in again just below the 1200. And today we did indeed test that area. It faltered there a little bit. However, we've since moved higher. And of note here is the very strong breadth ratios. I believe they closed over 2,700. It's very rare to get a top in that scenario. And indeed, that muted my bearish outlook even at the 38% retracement, which, by the way, the fact that we're going through those numbers, the A equals C, the 38% and so on, is a little bit of a red flag to me for the bearish count. Now here's that alternate bullish count, which in fact has us at a possible intermediate term low down around 1100. We have A down, and then our A, B, C, D, E triangle, and from there we have 2.62 times A, which is an extension to be sure, but not totally unheard of in terms of the relationships between A and C in a corrective pattern. Again, it remains to be seen which of these counts is going to work out, but let's watch the clues along the way. And right now the clues are still pointing at least short-term higher. Here's more detail on that triangle B wave and then 2.62 C wave down. The key area, if indeed this bullish count is going to pan out, and again this is a dated chart, is this low, wave 2, which is about 1118 on the S&P cash. If that low holds, we have a possible bottom there. If we take it out, more than likely, obviously, we're going to see new lows, and in fact, we may be into a fifth wave or some kind of extension of a third wave to the downside. So 1118 is the first place that's critical for this market to hold, and then obviously the low around 1100. Here's a bit of a longer-term view and how that corrective pattern plays out. It's not clear to me exactly where we are in this longer term count. Is this decline just A of a larger corrective decline, or just a portion of A? Hard to say at this point, but to my way of thinking, I think again we have it, and I've mentioned this many times over months now, we have an ABC up. Obviously we've fallen short of where I thought it might have gone if we'd completed that triangle, but it's still all the pieces fit. You've got a clear 5 waves up, so to our wave 5 of C, and from there A, B, C of A down. The other scenario, again, obviously, is that we're going to bounce up a bit. If that is the case, there should be resistance at the bottom of that triangle, perhaps up in that 1250 area. It could go a little higher if indeed we do start to bounce. The other possibility is that this is a completed correction here. I don't favor that. I think that the kind of decline that we've had needs more time to unfold. Here's the Qs. This is my projection that I put out there prior to the weekend. Again, here's that almost dead hit at the target of A equals C on the Qs, the corrective decline, so it did not pan out. NASDAQ futures, and I think that the next critical area for the NASDAQ futures is the top of the previous fourth wave and the A equals C. Very different counts in the futures and the cash right now because of some of the wild swings we've had overnight. Anyway, an A equals C in the NASDAQ futures comes in up around 2250 or so, 2255. Here's a little more detail on that. And that's also, I believe, a 62% retracement of this decline off of the highs at 2438. Again, reviewing, this is an old chart of the Euro FX. You'll remember I had counted 5 waves up and was looking for a corrective decline. We got that corrective decline, and from there I labeled this obviously a wave 2, and then another 1 ABC down of 2. Here's the 480 minute, and so far this is indeed also working out. We've got a 1-2, 1-2, and a pretty good rally here today in the Euro FX. And finally, natural gas. I had mentioned resistance around the 411 to 420 area, and that resistance has worked out. I did mention that if we got a corrective decline off of that area, I would consider buying it. However, as you can see here, this decline does not look particularly corrective yet. We're threatening to take out this swing low. So the natural gas one step at a time approach, hopefully is working out for you. I would wait and see and let this thing develop into a corrective decline before looking to buy natural gas. At least that's the way I do it. As I'm seeing here, we actually are coming off the highs a bit on the NASDAQ futures. It's possible that this market has started to lose some momentum here. So again, I would be wary of this market longer term. I think the potential exists. In fact, on that basis, the S&Ps, the longer term potential, even in a corrective decline, is another 2,500 points to the downside. So be careful with these markets. I think that it does make sense to take the bearish perspective and then let the bullish side prove itself out. And so for now, I'm still looking for that potential sell signal. I've actually been short and out of this market, and I probably will short it again here on weak rallies. That said, as always, let's trade the market and see what happens next. We've got a game plan to look ahead. And again, if you want updates, visit smarttrades.com. I do live tweets throughout the day. I update the newsletter several times a week, sometimes almost daily if the markets are moving. And also there's a link there to my Facebook page, which occasionally I'll post updates to charts before they actually come out here on YouTube. In that it oftentimes takes a couple hours to put a video out. Anyway, thanks so much for watching. That went a little longer than I'd like, but I really appreciate you watching, and have a great day. Bye-bye.